Hello, Assalamu alaikum. Hope that got that right. I did have some help at the beginning from Omer. Welcome back to Global Payfest 25, our 24-hour journey around the world of payroll. Our next three stops cover the Middle East and Africa, with our first stop exploring the complexities and unique challenges of payroll in Saudi Arabia. I'm Steve Yardley, and I'm the MD at JGA Recruitment. I'll be your host for this session, and I'm delighted to continue our event for this next hour. So, as multinational organizations pursue opportunities in Saudi Arabia, the Middle East's largest economy, understanding this payroll landscape becomes increasingly critical. The Kingdom, with its Vision 2030 economic transformation plan, its evolving regulatory framework and unique cultural considerations, presents distinct challenges that require specialized knowledge. Today, I'm delighted to be joined by Omer Saleem, Managing Director of TMF Group's Saudi practice. As the country lead for TMF Group, a global corporate services firm, Omer provides strategic and operational leadership across all business functions. He has 15 years experience in financial markets, strategy development, change management, and client relationship management. Omer has scaled up multiple businesses, both vertically and horizontally, through multiple mergers and acquisitions that have added to his skill set in business process improvement and restructuring. Omer is known for managing and collaborating with distributed teams across the globe using technology to facilitate and enhance communication, productivity. So who better to join us for the Saudi Arabia stop in the Global Payfest? Omer, thank you so much for joining us today. And sharing your expertise with our global audience. Could you tell us a little bit about yourself and your experience with Saudi payroll?
Thank you, Steve, and hello everyone for joining the Global Payfest 25. I'm really excited to share some insights into Saudi Arabian payroll. TMF Group is a multinational group. We have 93 offices globally. We've been helping clients expand globally and navigate the complexities of various markets. We handhold them through all corporate services, and payroll is a critical piece of that equation. I've been in Saudi Arabia since 2016. We've got about 85 team members here in Saudi Arabia focused on simplifying the market entry into Saudi Arabia, and then really making sure our clients are compliant and efficient in their operations in Saudi Arabia. So that's a little bit about me and TMF Group.
Fantastic. Thank you, Omer. During our session today, we'll be covering key Saudi payroll challenges, any recent regulatory updates, and best practices for multinational organizations looking to open in Saudi. We're then going to walk through a practical case study that demonstrates how to tackle complex Saudi payroll scenarios. And finally, we've got a list of questions, and we'll address some common questions that payroll professionals will often encounter when setting up in Saudi Arabia. So without further ado, let's get started with Omer's expert presentation on Saudi payroll. Over to you, Omer.
Brilliant. Thanks again, Steve. So payroll is a pretty critical component for any client. It doesn't matter which sector you're coming in from or which area you're addressing. Payroll is a staple. So I'm kind of really excited about sharing insights on the complexities and unique aspects of processing payroll in the Kingdom of Saudi Arabia. We'll cover 8 different elements, which hopefully will give you a broad level perspective of the main areas to focus on when you're setting up your payroll function or you're looking at the payroll function, whether it's internal, in-house, or through a partner or service provider. So when we talk about Saudi Arabia's payroll landscape, it's absolutely crucial to understand the foundations, the labor law framework. This framework is anchored by the Saudi labor law, specifically the Royal Decree number M51, along with its detailed implementing of the regulations. Essentially, this legislation is the rule book that dictates how employment relationships are structured and managed within the kingdom. It covers everything from employment contracts, working hours, leave entitlements, to termination procedures and end of service benefits. As a client, you must ensure your payroll processes are fully aligned with these legal requirements to guarantee compliance and protect both your employees and your firm as well. So, this framework is the bedrock of ethical and legal employment practices in Saudi Arabia. Let's move on to a critical aspect of operating in Saudi Arabia, that's Saudization and the Nitakat program. Now, this is a core theme that will, continuously come up for clients looking into the Saudi market. At its core, Saudization is the national policy aimed at increasing the participation of Saudi nationals in the private sector workforce. The primary mechanism driving this is the Natakat program, managed by the Ministry of Human Resources and Social Development, MHRSD. Natakat isn't a one size fits all program, it operates on a dynamic classification model. Essentially, it categorizes companies into color coded zones: platinum, high green, mid green, and low green. This classification directly reflects how well a company is meeting its specific Saudization quota. So, how are these quotas determined? There are two primary factors. The first one is the company size. The required percentage for Saudi employees varies significantly based on the total number of staff. MHRSD defines specific brackets for micro, small, medium, large enterprises, each with distinct targets. The second factor is the economic activity or the sector. Netakat recognizes that different industries have different labor market dynamics. Therefore, the required Saudi percentage is tailored to the specific economic activity code under which the company is registered. A tech company might have a different target than a construction firm of the same size. Your company's Netakat status directly impacts your operational capabilities. Compliance companies in higher zones, platinum or green, benefit from streamlined government services, faster visa processing for their expat employees, and easier access to government programs as a whole. In addition, you find it easier to bid for government or public sector RFPs. Falling into lower zones leads to significant restrictions, including limitations or complete blockage on issuing new work visas, exit re-entries, common renewals, and potentially financial penalties as well. The calculation isn't always straightforward. Factors like minimum Saudi salary, thresholds, and specific job roles being targeted for 100% Saudization add layers of complexity. MHRSD frequently updates the Zakat framework requirements in targeted professions to better reflect the market conditions and the demand side, making it an ongoing monitoring and compliance absolutely essential. From a service provider perspective, accurate or a client perspective, operations, accurately calculating your Saudization percentage, ensuring compliance through strategic hiring and workforce planning, and managing the associated payroll complexities are areas where we provide crucial support to our clients. Staying compliant with Natakat is not just a regulatory hurdle, it's an imperative part of operations for sustainable business in the kingdom.
Does that change as sorry, I was interrupting there, but does that change as your business changes, so it's constantly monitored?
Absolutely. So, the Natakat started with, our Saudization program started with a very basic total employee demographic percentage, right? So you had number of Saudis, and then you had number of expats, and you had to maintain a certain level. And then they Saudized certain roles. And then the activities part kicked in. They classified different sectors which had higher Saudization, lower Saudization, and the third phase was bringing, for example, HR is completely Saudized, so it's 100% Saudized. There's 100% Saudization within the finance roles as well. So there's a mix of different dynamics that play that make up the final equation, and it's a balancing act and it's a compliance act of making sure all these pieces fit together and they're balanced to come out on top.
Yeah. It's almost like an organic process, right? It's fascinating.
Yes.
Okay.
It's actually very, very fascinating how they've done it and how regularly they adapt to what the market demands are.
Okay. Fantastic. Thank you.
Of course. The third element I'll cover is GOSI, the General Organization for Social Insurance. So this is essentially the equivalent of social insurance programs and systems that cover workplace injuries, pensions, and employment insurance. For any business operating in KSA, understanding GOSI isn't just advisable, it's a fundamental element to compliance and employee welfare. Think of GOSI as the kingdom's comprehensive social security program. It's mandatory and primarily covers individuals working under a formal employment contract subject to Saudi labor law, encompassing both private and certain public sector employees. So let's break it down. There are three major components of GOSI. The annuities branch. So this is the cornerstone for retirement, disability, and survivor benefits. Primarily covers Saudi nationals. It's funded through contributions from both the employer and the employee. Currently, the total contribution rate for this branch is 18%. So essentially, 9% is paid by the employer and 9% is deducted from the Saudi employee's monthly salary. The next is occupational hazard branch. This branch provides coverage for work-related injuries and occupational diseases. Importantly, this coverage extends to all employees, whether they're Saudis, nationals, or non-Saudis. So the funding for this branch is solely the employer's responsibility, and it's currently set at 2% of the wage of every employee. So this ensures medical care and compensation if an employee suffers a work-related injury. Introduced more recently is SANAD, which provides temporary financial support to Saudi nationals who lose their employment involuntarily for reasons beyond their control. Similar to the annuities branch, it's funded jointly. The current contribution is 2%, 1% paid by the employer, and the other 1% is deducted from the Saudi employee's salary. So the total GOSI contribution is 22% for Saudi nationals. The employer pays 12%, and the employee contributes 10%. For non-Saudi nationals, the employer only is required to contribute 2% of the occupational hazards branch. So from an employer's perspective, from a client perspective, managing GOSI involves several technical steps, making sure your entity is registered with the GOSI portal, and you have a GOSI certificate as part of your post-registration process, and then making sure you're accurately calculating contributions based on the correct wage components, basic housing, and then ensuring timely monthly remittance of both employer and employee contributions. And then finally, maintaining precise records. Non-compliance can lead to significant penalties, on top of which the GOSI system is linked to the other MOL systems, so they cross-check the information that's in the GOSI portal with other portals such as the Mudad portal or the Kiva portal. So in essence, GOSI is mandatory, multifaceted system, vital for employee security in the KSA, and it's really a non-negotiable compliance area for all employers. The fourth element is essentially fiscal obligations in Saudi Arabia. They fall under the zakat and corporate income tax categories. It's crucial to understand that these are distinct and their applications depend primarily on the ownership structure of the business operating in the kingdom. The governing body for both is the Zakat Tax and Customs Authority, ZATCA. So we'll cover Zakat first. This is basically a tax levy on Saudi nationals and citizens of the GCC countries who are shareholders or owners of a business in KSA. So who pays? The Saudi and GCC shareholders pay Zakat. It's calculated on the Zakat base. So basically, in a very simplified manner, the net profit, and broadly defined as the net worth or working capital calculated according to specified ZATCA rules. The annual rate is 2.5%, and this is normally paid out once your audit is complete on your fiscal financial year.
Okay.
The second, corporate income tax. This tax applies to share of profits generated by foreign investors in a KSA entity. So this rate is at 20% net adjusted on net adjusted profit. So once again, if your company has a mix of ownership, if you don't, it's very clear. But if there's a mix of ownership, it's based on the pro rata ownership of the Saudi national GCC owners versus non-GCC or non-Saudi owners. So the company calculates and files for both obligations with ZATCA based on the pro rata respective ownership percentages. Compliance involves accurate calculations, annual filings of returns with ZATCA, and timely payment. And non-compliance can lead to heavy penalties and significant operational difficulties. The fifth element is the wage protection system. It's essentially not just a guideline, it's a mandatory electronic salary transfer system enforced by the Ministry of Human Resources and Social Development, MHRSD. WPS mandates that employers in the private sector pay their employees' wages through specific accredited banks operating within Saudi Arabia. The primary goal is to create an official verifiable record of salary payments, ensuring transparency, timeliness, and accuracy. So how does it work? So first of all, obviously, just like the GOSI portal, employers must register their entity on the relevant MHRSD platform. These are integrated platforms like Kiva, and link it to their corporate bank account used for payrolls. Then, when processing payroll, companies must generate a specific electronic file, commonly known as the WPS file. This file isn't just a simple list, it adheres to strict format defined by the MHRSD and the company's bank. So it includes detailed information for each employee, unique national ID, bank account details, and specific components of the salary which must be paid out for specific pay periods. This generated WPS file is updated by the HR and payroll teams, and then uploaded securely to the company's online banking portal. The bank uses this file to execute the salary transfers directly to the employees' accounts. Crucially, the bank then automatically transmits the confirmation report of these transactions back to MHRSD's WPS system. It provides MHRSD with direct visibility into salary payments. They monitor compliance based on these bank reports. And then they cross-check this against the GOSI system as well. For employers, compliance means ensuring your payroll system can generate this specific WPS file format accurately, and that payments are executed through your registered KSA bank account within the stipulated time frame each month. Failure to comply can lead to penalties, fines, and then there's always a WPS filing that has to be done to outline any discrepancies. From a payroll perspective, if you have a payroll service provider, they can actually prepare your WPS file using your labor file number, MOL number, and they can submit this on your behalf, either on your bank portal, or they can pay it through their bank portal as well, just as a side note. The sixth element we'll discuss is end of service benefits. EOS. This is a mandatory statutory payment governed by the Saudi labor law, specifically the Articles 84 through 88, payable to an employee upon termination or conclusion of their employment contract. Think of it as a severance payment, recognizing the employee's tenure. The calculation for EOS hinges on two key factors: the employee's total length of service, and the reason of the employment contract ending. So the standard calculation based on these employer termination, contract expiry, redundancy, force majeure. For the first 5 years of continuous service, the employee is entitled to half a month's final wage for each year that they're employed, up to 5 years. For each subsequent year beyond the 5 years, the entitlement increases to 1 full month's final wage per year. Now, if the employee resigns, it's a little bit more complex, and I'll try to go through this, but maybe we can have this in writing, Steve. The entitlement is adjusted on the following durations. So services less than 2 years, no end of service is payable. Services between 2 and 5 years, the employee is entitled to 1/3 of the standard EOS calculation. Services between 5 to 10 years, 2/3 of the standard EOS calculations, and service of 10 years or more entitled to the full standard EOS. There's just one exception here. So if the female employees resigning within 6 months of marriage or 3 months of childbirth receive their full end of service benefits, irrespective of the service length. So calculating the end of service on the final wage is really critical. According to the labor law, it's generally the last full wage that was paid, which includes basic salary plus all the recurring contractual allowances, such as housing and transportation. A lot of clients make a mistake of using the wrong components or maybe just calculating the end of service on basic salary, which is a very common pitfall. And then the fractions of the years are also calculated on a pro rata basis. There's multiple government-based calculators online. So accuracy is paramount. Miscalculating end of service has been a pretty, because there's so many factors involved on how the termination happened, the tenure, tracking dates of joining, making sure the information is accurate, the reasoning is accurate. These are all really significant areas which sometimes clients don't follow, and this can have serious repercussions in terms of labor court cases, etc. We've seen quite a bit related to this element.
As always with payroll, there's nuance within nuance, and
Absolutely.
yeah.
It's all about being proactive, right? So essentially, just having the wrong date of joining in the system, this,
Sure.
when the actual contract kicked in, especially for clients who have, multiple transfers within entities or within divisions, this can be a tricky sort of.
Then if you layer in a reason for leaving as well as all of that, to then factor them. Yeah. Okay.
Absolutely.
Okay.
Yeah. So it becomes pretty challenging. So it's once again, payroll is all about accuracy and proactiveness and keeping good records, right?
Mm-hmm. Exactly.
So last, number 7, we'll cover the different kind of work permits. Obviously, these have impact on how payroll is processed. This also addresses another layer of complexity within the Saudi employment landscape, the variety of work permit authorizations that are there. So it's crucial to kind of understand that bringing foreign talent into KSA is a very common practice. However, it's not a single track process. There are multiple visas and permit categories, and each carries distinct compliance implications, particularly for HR and payroll. So the most common route historically is the standard work permit, or IQAMA, which is intrinsically linked to the sponsor, typically the employing entity. Often before an employer can even initiate a individual work permit application, they must first secure a block visa. So this is essentially a pre-approved quota from the government authorizing them to recruit a specific number of foreign employees for designated professions. So this now links back to the Natakat conversation, Saudization conversation that we had, because that is a direct driver of how many visas and quotas you will have. So the IQAMA or work visa requires the employer to initiate the process for specific individuals, and upon arrival, the employee then receives an IQAMA, their official residence and work permit, and then they can sponsor their dependents as well based on this IQAMA. And there's a huge process that goes into it. We can cover that on a side note, but for payroll purposes, the IQAMA is the most common vehicle for bringing in expat employees. Compliance here involves strict adherence to sponsorship regulations, managing visa renewals, and understanding limitations on work activities, which must align with the visa profession as well as the educational credentials of the expat employee. Payroll implications include standard COSI contributions for non-Saudis, as we discussed, as per labor law. So the landscape is evolving. We've had several categories come and go. We now have a significant new set of categories like premium residency permit. This comes in various subtypes, such as for investors, entrepreneurs, highly skilled individuals. The key difference for the premium residency program holders are generally that they're not tied to a single sponsor. There's obviously a whole list of other benefits. But not being tied to a single sponsor allows them greater flexibility, and they can also invest in local businesses as an individual. So the other types of visas or work permits are temporary work visas for short-term projects, often with a specific duration limits and restrictions. Then you've got the business visit visa. So these technically don't permit formal employment, but allow certain business activities. You have to be very vigilant on what is allowed and what isn't. And then obviously the dependent visas for family members to bring them in, requiring separate authorization. So from a compliance perspective, ensuring the individual's permit aligns with actual work performed, their qualifications, and their educational background is really important. Making sure you adhere to GOSI and the service, you're mindful of mobility and transfer. There's an exit reentry and exit reentry program that has to be initiated when employees are traveling in and out of the kingdom. And then the level of sponsorship duty, renewal responsibilities, issuing exit reentries, this all falls on the employer. And these are all elements that either your HR and GR, government relations department, takes care of, or a service provider like TMF Group can completely manage end to end on your behalf. So lastly, we'll kind of go over some of the Vision 2030 reforms and regulatory changes that affect employment practices. In Saudi Arabia, you can't have a conversation without touching on Vision 2030. It's far more than an economic blueprint. It's been the catalyst for profound and rapid transformation across the whole society. This fundamentally impacts the employment landscape, payroll practices. We're seeing continuous regulatory evolution aimed at creating a more dynamic, skilled, and digitally integrated workforce. So let me highlight some of the key areas where Vision 2030 reforms are directly influencing HR and payroll right now. There were major labor law amendments effective in February 2025. These are recent developments. Basically, written fixed-term contracts are now mandatory for non-Saudi employees. The formal process via Kiva platform is now defined with specific clauses, specific timelines for employers to respond, and any resignations have to go through the Kiva platform, which is a brand new development. Notice periods have been revised. For instance, 60 days notice period from the employer for terminating monthly paid staff. Maternity leave is extended to 12 weeks. Paternity leaves rules are clarified, and essentially overtime can potentially be compensated with leave upon agreement. All employers, regardless of size, now have obligations to train a certain quota of their Saudi workforce, focusing on skills development, requiring formal policies and annual reporting. This kind of directly impacts the workforce planning and development budgets. There's an accelerated digital transformation and compliance initiative. So Vision 2030 heavily emphasizes digitization. For payroll, this means platforms like Kiva are central, used not just for contract authentication and visa processing, but now also for managing formal resignations, process, and employee mobility. And once again, as I mentioned, these platforms are increasingly interconnected, and the information is cross-checked. So it's really imperative that every platform is updated and the information is synchronized.
Just,
Go on,
just
please.
that, I was just thinking that, obviously the setup tough, but does that help going forward? I'd assume that then makes payroll easier to be compliant. Yeah.
Yeah, absolutely. I mean, in any digitized interconnect system, the initial setup is where the challenge is, and then making sure you're staying above and maintaining it with new joiners and leavers. And at the same time, it adds confidence to the market, right? Where Saudi used to be a bit of a black box, you had a real challenge attracting talent to come into the market. With these safety nets and checks and balances in place, there's a lot of confidence within the private sector for employees that they will be paid on time. There's transparency in the system, and they have a course of action if things don't go according to the labor law.
Yeah, sure. Okay.
Um, you know, so we talked about Kiva. The other is the Mudad platform, which is, you know, compliance for the wage protection system, which we spoke about. So as of March 1st, 2025, the deadline for uploading monthly wage protection files was reduced from 60 days to just 30 days. So this demands even greater payroll timeliness and accuracy. So basically, in summary, these digital systems provide authorities with greater real-time visibility into employment and payroll data, making accuracy and timely compliance completely non-negotiable, right? And then the deepening solicitation method. While not new, as I mentioned, it's been evolving. The focus intensifies under Vision 2030. So new mandatory training requirements are there for Saudi nationals across the workforce, businesses. Payroll systems must accurately track workforce composition for Natakat compliance and manage different COSI contributions. So ultimately, what does this mean for clients and businesses? So the pace of change requires constant vigilance. HR and payroll functions must be agile, technologically integrated, and absolutely precise. Policies need frequent updates, and processes must align with digital ecosystem mandated by the authorities like MHRSD and COSI. So, clients, TMF clients, they rely on us to essentially keep abreast of these changes, regularly update them, and make sure they're above the board when it comes to any implementation requirements as well. It's a very dynamic environment, but the beauty of it is that it's moving in a positive development towards global best practices. And that kind of summarizes everything from a Saudi payroll perspective, Steve.
It's amazing. It's amazing. I really appreciate it. There's some real insight there as well. Um, for your experience with payrolls globally, how do you find the Saudi payroll experience?
I mean, it's actually over the past 3 years, or I would say 4 years, since Vision 2030 came into play, and the immense amount of digitization that's happened, the progress that space has experienced is exponential, and the velocity of change. I always talk about perspective, right? Someone who comes into the Saudi market right now, they look at things and they say, "Yeah, this is pretty good practice," but what they don't realize that a lot of these developments have opened so many doors for employees in terms of how they come into employments, how they get paid, and how they switch employers. And all of this has happened in the last five years or so, right? So that velocity of positive development is pretty amazing. And compared to a lot of other jurisdictions, so TMF Group as a whole, we're in 93 locations and we publish a global complexity index. And Saudi's been consistently moving up. And if you go visit that complexity index, there's a portal. You'll be surprised that Saudi actually ranks from a payroll perspective way higher than some of the G20 countries that supposedly have more advanced payroll regulations and legislation.
Okay, that's fascinating. You never know till you talk to an expert, right? So I really, really appreciate it. I think, yeah, I was looking at standardization requirements, the implementation of WPS. It's fascinating stuff, and I think it's invaluable to know for someone that would be looking to come to Saudi Arabia. On that, have you seen an influx of business coming in?
Absolutely. So, it's been double digits influx. So we do incorporation as well. So we see, clients across 8 or 9 different sectors coming in. So just to give you a context, in Q1 last year, there are about a total of about 1,200 incorporations, and this year alone there was 4,000 plus in just the first
Oh,
quarter, right? So
wow.
it's
Okay.
uh, it's a really dynamic market with everything that's happening globally in other markets. It's one of the few high growth markets where there's a lot of activity happening on the ground, especially with the introduction of Saudi Expo, the World Cup in 2035. So there's immense amount of value creation on the market, and we're really urging clients to look at it and be part of that narrative.
Exciting times, and you're looking forward to the World Cup, right?
Yes, absolutely.
Fantastic, fantastic. Okay, so Global Payroll Fest. Here we keep going. A lot of work from Omer here, so I do appreciate it. But you are the man with the knowledge. So we're going to look at a case study. This does involve me sharing a screen on Zoom, so bear with me, guys. But the case study we're looking at a fictional company. So we've got the name. It's Neo Fusion. I don't know if that's fictional or if it's something of a TV show, but Neo Fusion Tech recently set up operations in Riyadh. It's a team of 22. Omer, we are going to ask you to walk through the payroll challenges they've encountered, anything around GoSee, Saudization, of everything we've spoken about with compliance, and looking at the navigating the complexities of the Knit-A-Cat system. So, as I warned you, let's see how I do with this share screen. I think I have got it. There we go. Can we see that? Have you got that, Omer?
Yes.
Perfect. Okay. Over to you then.
Perfect. Thanks, Steve. So NeoFusion is a pretty great setup. Obviously, it's a fictional name, but the case study are real cases that we've sort of put together. And they're quite representative of many companies and clients who encounter these challenges when they're setting up operations, specifically in Saudi Arabia, when they're navigating the intricacies of Saudi payroll for the first time. A lot of times, so this example is for a tech company. They're ambitious. They've got a pretty decent setup on the back end. And the team size was 22 team members, right? It was a mix of Saudi nationals and expats. And that's a very interesting size, right? That's usually the lighter footprint that most clients coming into the Saudi market have. But what that also does is, it doesn't allow them to have a very dedicated or large internal HR payroll team, right? If they're doing it in-house. So, keeping abreast of all the changes that are happening, it's usually sort of concentrated in one or two individuals that they have. So as Steve mentioned, despite the tech focus, the client runs into several critical payroll and compliance challenges. And these weren't just minor administrative hiccups, right? These began to impact their core operations, particularly around GoSee reporting, Saudization compliance, and even handling employee-related operations with visas. So we'll break down the challenges as they faced. So the first one was incorrect GoSee contributions. One of the first major issues that surfaced was related to GoSee, the General Organization for Social Insurance. GoSee contributions, of course, are mandatory. So the correct way is for Saudi nationals is to contribute 22% overall from the contributory wage, split between the employer 12% and employees at 10%. We've already kind of gone over that. And for expats, it's essentially 2%. Now with the client, New Fusion's error, in their initial payroll, expats and Saudi nationals were incorrectly reported under the same GoSee category, right? So they didn't really classify non-Saudi Saudi status, and basically in their system, I don't know if this was essentially a category that was not available, or they just didn't properly categorize. But nonetheless, the result was there was a mixture, and this led to significant overpayments for their expat staff, while deducting pension contributions that they weren't liable for, and the employer paying the higher rate, and potentially underpayments or incorrect reporting for Saudis. Though the overpayment for expats was the more prevalent scenario. The consequences were dire. Obviously, this wasn't just a financial drain due to overpayments, created a reconciliation nightmare, risking non-compliance, GoSee audits, and then potentially hindering GoSee services and delay in obtaining GoSee certificates, which are really needed for any RFPs that you put out there. And really business, when you apply the GoSee certificate, is a key element. The second challenge was with visas and unpaid leave calculations. So this involved managing payroll deductions for employees taking unpaid leave. This is option, and this was associated with their exit re-entry visas. Um, when an employee takes an approved unpaid leave, their salary should be adjusted proportionally for the days that they are absent and unpaid. This needs to be accurately reflected in the payroll run for that period. Communication between HR, who approves the leaves and tracks visa status, and payroll, who calculates the salary, is really crucial. So in New Fusion's case, their payroll process did not effectively factor in or track salary deductions for employees on unpaid leave concurrent with their exit reentry visas. There was a disconnect between the HR department's leave tracking and the payroll systems, uh, and the information wasn't relayed in time, nor was it captured in payroll cycle cutoffs. And this was a cascading effect, kind of added up over time. The result was that employees on unpaid leave are often paid with their full salaries, uh, or the necessary deductions were simply not made or delayed. This led to direct salary overpayments impacting cash flow. Also meant that the wage protection system files weren't accurate, showing payments that didn't reflect the actual work performed. And this, furthermore, it led to complex clawbacks in post payroll periods and a complete disassociation of the work performed with the salaries that were paid out. And this became a real big issue for certain cases where there were final settlements which had to be paid out. Um, so last challenge was the Saudization ratio mismanagement. Um, Saudization, driven by the Vivicat program, is probably one of the most critical compliance areas for businesses in KSA. It's kind of affects all levels of operations. You know, if your netakat is in red or in the lower categories, you're kind of handicapped on multiple fronts. Um, so for a company like Neofusion, with 22 mixed employees in the tech sector, there would be a specific solidization percentage, 25% or above, that they need to maintain and to stay compliant within the Netakat zones. So what happened with this client was there wasn't an initial focus on Netakat management. Rather, there was an eagerness to just sort of fill the roles that they needed to execute their projects without actively really managing their hiring against the Netakat requirements. So what had ended up happening was their solidization goals were not really being met in their actual payroll headcount. Initially, it was all right because they did hire local Saudis, but when they hired expats for certain roles, quickly they fell into non-compliance, and it really hit their operations hard. It affected their ability to renew existing work permits, issue exit reentries, and block them from obtaining new visas. It slowed down their projects in general, and essentially the loss of confidence from their clients as well. So one more challenge was the Netakat compliance. The Netakat system associated with platforms like Kiva is used for contract registration and visa processing. It relies very heavily on the standardized job titles and classifications recognized by the Ministry of Human Resources and Development and Social Development. Using internal, generic, or non-standard titles can really cause discrepancies. Some specific professions have high Saudization targets or restrictions entirely for Saudi nationals. So it can really cause a mess in your Netakat management. The client's HR function failed to align in the internal job titles they used with the approved Netakat and visa classifications. Furthermore, they had discrepancies between employee qualifications and their Akama titles as well. So the consequences were dire. Even when their overall headcount ratio looked okay, they faced significant Netakat issues because they used incorrect internal job titles, which weren't aligned with the MHRSD list. There was rejection of visa applications, renewals, and it adversely affected their net account ratings. So as you can see from NeoFusion Tech's scenario, despite being a relatively small initial team, they faced a convergence of payroll challenges, um, from financial inaccuracies, from inaccurate GOSI registrations and filings, salary payments, severe operational risks from low Metacat compliance, and data integrity issues due to misaligned job titles. Um, so this is where the solution was implemented. The first step was a thorough audit of their employee classifications. Employees were correctly reclassified in the payroll system based on their nationality. We ensured the system logic applied the distinct COSI contribution rules and rates accurately. This was a challenge because at that time, a lot of ERP systems did not have a local Saudi payroll module, and this was an add-on or bolt-on, and everything had to be entered manually into those into the HR module. Um, to address the leaves and visas, a tracker and a process tracker was implemented. This ensured timely communication between HR and the payroll department. This allowed for accurate salary deductions to be factored in based on the amount of work that the employee was contributing, as well as any unpaid leaves got factored in. And then these were more accurately reflected in the monthly payroll cycle as well as the WPS submission. For solidization, we didn't just identify the problem, we helped them build a solution. Solidization compliance roadmap was developed. This involved analyzing their current ratio, calculating the precise requirements for their size sector, and also advising on a strategic hiring plan to achieve and maintain a target ratio needed for a healthy Nethercott status. The Employee Affairs Department worked very closely with the HR department of the client to map out what their growth strategy was and make sure that their hiring balanced the hiring of Saudi nationals with non-Saudi expats. Um, we also assisted the client in reviewing and revising their internal job roles and titles to match the official MHRST classifications. So this involved mapping existing roles, updating HR records, ensuring consistency with visa professions, and reflecting these accurate classifications in the payroll systems code. So this ensured accurate reporting in alignment with platforms like Kiva. Through this systematic approach, the client was able to successfully correct their payroll errors, stabilize their visa processing, and basically bid for more business, and essentially keep up the growth in their manpower employee base. What else did we do? I think, yeah, these were sort of the major takeaways from this use case. Over to
I
you,
think
Steve.
Yeah, thank you. And I think it's fascinating, a little bit scary, like 22 employees and how initial small problems can then cascade. And I mean, especially if you're a new company in a new country, commercially you want to hit the ground running, you have that impact, and things like this can really, really derail that. So it's a really good example. I really, really appreciate it. A little bit scary, but obviously the best thing to do is
Well,
go and see the right
absolutely.
people. Right? So
This is the thing, right? The company was eager to go in. They had, a lot of clients come in. They have contracts in hand, or they're being pushed to set things up so they can actually participate in business, and they're eager to go on. So they've got regional HQs or HR departments who are then relying on a single person on the ground, right? So it's really difficult for a single person or maybe two-person team to kind of cover all of these bases. And this is where um, firms like us, GGA, these come in where we can actually handhold things and help set up things properly, um, and
I think
really
it's
make a
I
soft
think it's
landing.
it's your depth of knowledge and the
Yes.
fact that your business is to keep up with it. Because obviously from everything you've gone through here is there's rapid change. Obviously there's for the whole kingdom, there's a cultural and a commercial drive, right? But at
Yes.
the same time, small businesses have the same kind of like, drivers as well. So I think it demonstrates the value of what you guys do. So I really appreciate that. It's a really good way of sort of going through it, I think. So thank you ever so much. I am mindful of time because we are obviously global pay fest and we are traveling around the world. So I think so. We're given an hour, so I'm just making sure that we're working to time on that. So, and I think it's testimony to the amount that we've learned and gone through. What I was going to go through next is a few sample questions. I don't think we'll be able to go through them all. So, but if you don't mind, Omar, if I go through some questions and you could give us your wisdom, that would be amazing. So, number
Uh,
one we had through,
Only the
how
young pretend to know
sorry.
about wisdom.
Ah. Um, Number one was how can companies most effectively meet standardization requirements while maintaining business efficiency? So kind of following on a little bit from what we were just saying, but yeah, if there's any sort of tips and tricks there from your side.
No, absolutely. Really, really important question because balancing solicitation compliance with business efficiency is sort of the key to the sustainable success here in the kingdom, right? So it's having a long-term view, of course, because that's what the solicitation program is. And it's not just about meeting a quota, it's about integrating solicitation strategically into your framework, into your ethos, essentially. So proactive workforce planning, I think, don't treat solicitation as a separate HR task or a risk. Integrate the program into everything that you do, into planning, into budgeting, before you start recruiting, and then identify roles where a Saudi talent can be developed. It's a broad-based talent pool that's available here, um, rather than just scrambling to fit people here and there, right?
Mhm.
And then I think the statistics are 75% of the population is younger than 35 years old, right? So and they're highly educated. So, be proactive in workforce planning, integrate the Saudi workforce into your strategy, into your operations, and then invest in the Saudi talent, right? So this is once again coming into the long-term view. Meeting the numbers is one thing, but efficiency comes from engagement, upskilling, etc. So focus on robust training, mentoring programs, upskilling your Saudi staff. This not only helps meet compliance, especially with the recent 2025 labor law changes emphasizing mandatory training, but it also builds a long-term capability and reduces turnover, right? And that's a direct efficiency boost. So look into utilizing government programs like HRDF programs, which essentially pay for new graduates for a full year, right? So there's a number of subsidies, there's a number of programs which kind of boost clients' efficiency if they incorporate them into the strategy. And then making sure you have accurate data and systems management. Efficiency is lost through errors and reworking. So ensure your HR and payroll systems accurately track Nithakat status in real time. You're proactive on it. You're calculating GOSI correctly. You're registering your employees properly onto this platform in a timely manner. Your contracts for your employees on the Kiva portal are up to date, and they're following the legislation that's been stipulated. Um, then analyze which roles generally require specific niche expat expertise versus those where local talent can excel, right? So perhaps even with targeted training. So focusing on solicitation efforts strategically can be more efficient than a blanket approach. So that's sort of it's a long-term view and looking at solicitation as a strategic element rather than just something to tick box. I
Yeah,
think that's
it's because it sounds like there's some fantastic stuff in there that businesses can use. So it's almost weaving it into your corporate goals, your structures. And if that can help with retention, I think that's key for everyone, whatever country and whatever business you're talking to. The cost of acquisition and retention is so important. We obviously know that on the recruitment side. So, but I think as you're saying, that it's weaving that through your corporate strategy and using those principles. So it's fantastic. Really appreciate it. Okay, there's a lot of questions we could look at here, so I'm just trying to cherry pick the best ones. Okay, how would companies or how should companies calculate and manage end of service benefits to avoid financial surprises?
Ah, uh, so this is just,
So,
sorry, just repeat that for me.
certainly, yeah. How should companies calculate and manage end of service benefits to avoid financial surprises?
Brilliant. Yeah. So avoiding financial surprises with end of service
Which
benefits.
everyone will want to do, right? No one wants financial surprises, Omer. So, yeah,
And end of
but
service is a big one, especially for tenured
yeah,
employees, right? Anyone who's been with the company 5+ years, and specifically 10+years, it's a significant liability. So it comes down to sort of meticulous calculation and a proactive sort of financial management of not just the salary aspects, but also other joining dates, etc., other employee elements. So first, absolute accuracy in calculation based on the Saudi labor law, and obviously, it's end of service calculations haven't experienced an immense amount of change, but the changes and updates are coming throughout the last 5 years, right? So using the exact service length, applying the correct rate, making sure your HR department is cross-checking, double-checking all the data, and the final wage is really critical, right? So including all the components in the final rate, wage is really, really critical. Second is financial planning, regularly accruing the end of service liability on your company's balance sheets. This is really critical, and an audit requirement as well, especially from an IFRS perspective. So update this accrual frequently, ideally on a monthly basis, based on the employee's current services, tenure, wage levels, so you have something to fall back onto and review. So this practice turns end of service from a large potential unexpected expense upon termination into a more predictable and manageable liability, which is reflected accurately on your financials, right? So reliable HR payroll systems, tracking services, dates are essential support for both correct calculation and accrual.
amazing. Okay. I really appreciate that. I also really appreciate your time. I think it's been absolutely fascinating. I think there's loads more we could go through, but that's payroll, right? Like it never stops. There's always
Just the
something else
service.
there. Yeah, exactly, exactly. So, but I really, really want to thank you for your time, Omar. Just gonna update everyone where we're going next. So, Global Payroll Fest 25. Next up, we're going to be going to the next session will be in South Africa. We're going to be heading there, and we're going to be with SD Viljan, HCM project manager, our own Natalie Lloyd, our own customer success manager at JGA Recruitment. So that's next up, and that will be the next hour there. But once again, I just wanted to say, Omar, it's some really great insight. I think businesses looking to set up in Saudi Arabia would know where to go now. So, and I wish you guys all the success there. Some excellent insights into the world of payroll there. Anything else you wanted to add just before we leave Saudi Arabia and then head over to South Africa?
Well, I mean, I'm sincerely thankful for you to include in JGA Recruitment for including us in this program, and for everyone joining us and viewing this journey around the world into payroll. We've navigated through areas like Natakat, COSI, and the service, and the significant impact that Vision 2030 reforms have had on the Saudi market. It's a very exciting market, and we're looking forward to welcoming new clients and more clients into the market and helping them have a soft landing and operate more efficiently. Um, Always open to a conversation. So we appreciate everybody's valuable time and participation today. And specifically, thank you, Steve, for having me on the program.
Not a problem. I've learned a lot, so thank you ever so much. And yes, thanks for joining Global Pay Fest over to South Africa. Thanks ever so
Thank you.
much, guys.